Traders. I hope you guys are doing good. It's been an amazing week. Uh, Going on to the second week of again practicing ICT concepts for us to find direction into the market. So I'm trying to go through the market and try to see what we are going to expect for next week. This is XAU USD. This is XAU USD. So now narrative is very important in your trades. And according to ICT, once you have the correct narrative, you have the correct, this one equals to the correct bias, okay? This one equals to the correct bias. Trust me, if you go to the market and you find the correct narrative of what the market is doing, you have the correct bias of where the market is going to go most of the time. So now I'll just change this one to forex.com. Now if you look at last week's closing in the market, we had a bullish TGIF which is on Friday. The week was bearish, and then we have a retracement for the week for closure. If you look at market prices all the way from this other side, I think I touched that one on episode 1. We had a bullish narrative prior to what the market is doing right now. So here we had a shift in market structure after a sweep of market liquidity. We rallied higher into this premium key level, and then we have one more time retracement back to an inversion. It started on episode 1. Then after that, we have the markets trading below this particular low. Now, this can be regarded again as a market structure shift. So this one was a significant indication for bullish continuation. This one on this other side is a significant indication for a bearish continuation, just because we have a very nice swing low here and it was traded through. So on last week's trading, the market was rebalancing this particular level here, and then we rallied back into the premium to that key level, and then we have a drop for market prices. What is the market dropping to? Since we did not continue with market prices higher, the market is drawing back to this particular level, which is a sell side liquidity that is resting in the market. So I'm going to label that one as a sell side liquidity, and then I'm going to remove this one. So you also realize that we have another significant swing low in here. So I'm going to also label that one. But reactions is very important. Don't cram the market. We traded below this particular swing low here. And then if you look at what the market is doing on this other side, it's a retracement. So where are we retracing to? For example, if you take the movement that happened here after we rebalanced into this order block, we have a break of structure, as most of you guys call it. I usually refer it as a market structure break. Now, this retracement here is supposed to go at least above the equilibrium price. So again, premium price, before we have again a continuation for market prices below here. So with this one that we already have, I already have a clue that Monday will be opening and we might trade above this particular Friday's high first before we now head lower. So that's just the narrative on the higher time frame. A lot of whatever that's happening here is going to be seen on the lower time frame. So now the time frame alignment for the daily, like I said, is the hourly time frame. Okay, is the hourly time frame. I want to make it this one as simple as possible. So let us assume that this is the break of structure you had on on the daily time frame, but I'm still gonna label that one as a sell side liquidity because it's a swing low. We took that one, rebalanced into this, and then we have a continuation for market prices lower and then lower. You will notice that on Thursday, the Thursday's low was taken on Friday, and then market prices gave you an impulsive price action bullish, and then we closed around this particular place. Now you ask yourself, if the highest high that we had was here, and then we have another intermediate high in here, and then we have a low that is printed down here. If you're to grade this particular market, I'm going to put my my fib retracement tool from there up to here. I'm always looking to see the markets trading above this particular 50% mark. So now above these particular levels, I'm going to try and look for a key level that the market is going to try and trade into before we head lower. So for this case, I'll can mark this one here because it's an order block. This is actually a bearish order block. It's the last bullish candle after we swept liquidity in terms of buy side here, and then we have a break of structure to the downside. The market is going to retrace all the way up to inside this particular level before we again have a continuation for market prices bearish. So you'll notice something. We have created a narrative, an idea of what we're trying to trade. So next week will be easy for us to go through because we have already established that if this is a low and this is where we are looking to see the markets trade into, then we will be waiting to see the markets pump into this, and then we look for confirmation from here, and that is going to be now our buyers for next week, looking to see the markets. I don't know why this one is not clicking. So I'll be looking to see the markets rebalance into this particular level, and then we will have a directional buyers direction that trades all the way from up here to this particular low. Remember, that draw for market liquidity is at 39.44, and it's also a swing low. So again, sell side liquidity. So markets usually trade in two ways. Number one, it's usually seeking liquidity and rebalancing key levels. They usually say fair value gaps in simple terms. So we seek liquidity, rebalance fair value gap, seek liquidity, rebalance fair value gap. In this case, we seek liquidity below this particular swing low. And then now we need to rebalance into an order block before we have the market again rally back to 39.44. To be very honest, I am looking to see a very deeper movement below this 39.44 and all the way to around 38. Around 38 there, 3800 or 3850. Okay. Reason being also 3850 is below a liquidity level that is being displayed as a sell side liquidity. So the markets will try as much as they can to displace that low, and then we continue with market prices bearish. If you don't see it nicely, you can just put the chart on a much time frame higher, just a one time frame higher. Don't go so much. In here, you realize that we also have this particular level here, which is an order block, but this is the initial order block, which is the last bullish candle before the bearish continuation. So the markets will try so much to attain that bearish order block. It's a 4-hour OB there. Then I'll be looking for a continuation for market prices bearish. Guys, that's all you're waiting for next week. There is nothing much to look for. It's just a confirmation and then a drawback to the downside. Have a good one. See you guys on the next episode.